Alrighty. Are we live?
It says that we are. Oh, it
All
just,
right.
yep, we
Awesome.
are.
Welcome in, everybody. Happy Monday. Happy Monday. Happy St. Patrick's Day. I got my green. I know it's a little darker, but I got my green. So no pinching me. All
Who's got
right.
the green beer?
Yeah. You got green beer. I mean, I got Mountain Dew.
Hey, for some reason I can't set this. Maybe you could do it like for the speaker. It's
Isn't that working on
I can't.
speaker view for you?
Yeah, I don't. Oh, there it is. I see it. My bad. I got it now. We're good. My
All
apologies.
right. You're good. How you doing, Mark?
Doing well, very well. Starting to get warm here in Florida, and it's you guys have had some beautiful weather up north, but some crazy weather went across the country in the last 24 hours, huh?
Oh yeah, lots of rain. We had lots of rain Saturday and Sunday. Lots
Yeah.
of rain.
I
So,
get
all right, guys.
nervous. I got quite a few properties in Alabama, and I get nervous every time, because it goes through Oklahoma, Alabama. And a couple years ago, no, last year actually, I had to replace a roof. Hail destroyed the roof. So I
Really?
always get nervous when I see, I watch the news and like, it's going that part of the country that where the tornado alley, if you will.
Yeah. It's the new tornado alley. It's shifted
Yes,
east.
used to
So,
be Oklahoma, now it's in Alabama.
yep, it's crazy. Yep. Now, if you guys are over on Facebook, welcome in. Happy Monday. I just dropped in the link in the chat below. Feel free to hop over and join us. We're over on Zoom. This that way you can hop in, actually ask questions with your voice, have more of a conversation, make things a little bit easier. If you don't have a Zoom or if you're not wanting to hop into Zoom, just drop your questions in the chat below. And over here on Zoom, welcome. Feel free to turn on your cameras. It is so much easier for Mark and I to talk to a face instead of just a voice. So if you can turn on your camera, that would be awesome. And we love to see you and talk to you. I mean, when you go out and network, you're putting a face to the name, you know? So it's a little bit better to see who you're talking to. So welcome in over everybody.
Unless
Let
it's
us
during
know.
unless it's during COVID, I used to hide behind my mask
Yeah,
so they couldn't
hide
see who
behind your
I am.
mask. Yeah. Well, or you're out there out protesting and just, cover your face no matter what side you're on. You're out protesting, don't want to be seen. So if
But
you
we
are
better stay
on,
we better stay away from that mess.
oh yeah, stay away from that. Yep. So just let us know, where are you tuning in from? Put it in the chat over on Zoom. Feel free to let us know where you're tuning in from. Facebook, let us know where you're tuning in from. I'm in Cincinnati, right here in the Midwest, right in the prime area. Mark, where are you at?
I am in beautiful sunny South Florida, Boca Raton, just north of Fort Lauderdale, and just south of Palm Beach. So, and about depending on traffic, about 45 minutes to an hour to Miami. And it's crazy. This it's just packed right down all the spring breakers. It's just I can get around faster on my e-bike than I can on driving right now. Because I'm on the water and the beach. It's just traffic's just wall to wall, and then getting into places for dinner, reservations. So what we tend to do is this time of year, like on a Friday or Saturday, if we want to go out to dinner, I always make reservations 2 weeks out at a couple places, and then I always cancel them because it's so hard to get reservations to go to places. But tomorrow night, my buddy, we're doing a ribbon cutting at. I have a good friend of mine. They have a movie theater chain, and they're opening another movie theater
Oh,
business up
awesome.
in IMAX. So that's cool. Yep. You want to talk about a home run deal, man? Those guys hit a home run.
Movie
He
theaters?
well, what happened was someplace. So what his model is they build it from the ground up, and then they run the business for 2 years, and then sell the movie business off, and they hold the real estate. Well, they did a deal in Ohio. I don't remember where. They took a loan out from a small community bank for like $17 million, and they paid roughly about their balance was about 14 million, and then COVID hit. They couldn't make payments. You saw the movie business, the movie theater. Nobody was going to the movie theaters, So, but the small community bank at the time, for every bad dollar, they had to have like $3 set aside. So this bank was freaking out. They wanted it off the book so bad. They were just like, so they went and negotiated over like 3 to 6. I don't know how long it actually was. It was several months. They negotiated to buy their own loan from the bank. Now, granted, they owed 14 million. They bought it for $4 million, their own note.
Wow. That's pretty
Crazy,
good.
huh?
That's pretty good.
That's a crazy $1 million swing. Bought the note. So
Both
they took a
bought their
loss.
bought their own note. Wow. That is crazy. I guess during COVID, everything was crazy, you know? So makes sense. All right. We got some people tuning in. We got Houston, Texas. Sat X. I don't know where that is. That's new to me. SATX. Central Texas? South Texas? I don't know. We got Central Oregon. That's a good area. I hear it's beautiful over there in Oregon. I've never been to Oregon, but I bet it's amazing. And then let's see, we got Texas over on Facebook. Welcome in Facebook. If you over on Facebook, feel free to drop below where you're from. Also, if you want, I'd posted a link. If you don't see it, let me know. I'll repost it for you. So, Mark, let's talk today about how we do not use banks. Um, I, I know a lot of us here have some properties already, and we're tired of using 20% down. I know that you have talked about using 5% down sometimes. How do you do that?
That's why I love seller financing strategies, because everything is all negotiable with the seller. So it really comes down to just negotiating. I mean, it reminds me when I first got into business when we used to do with banks, because you used to be able to negotiate. Nowadays, you just put it in a system and it underwrites. I remember the days where the underwriter used to underwrite it. It'd be like, the mortgage, if they're 30 days late, in 12 months, it'd be like one times 30, two times 30, one times 60. But now it's kind of like evolved, and it's mainly, really about seller financing and negotiating and trying to find a seller. There's so many different ways of finding the sellers that will be open to it. What I love, and I talked about, and I'm sure some of you guys heard about this, is what's called, I call them tired landlords. I love people that own a property for 12, 15 years plus that's been a non-owner occupied, and they're tired, but they like that passive income, and they don't want to get hit with the capital gains. So they're more open to doing like a seller financing strategy. So it's all about negotiating that with the seller down. And I always tell a seller, like I have one today. She was open to seller financing. She wanted $50,000 down on a home that was worth, I think, around like 350. And I told her, I said, hey, I'm not the right buyer. It just doesn't make sense for me to put $50,000 down. I could take that $50,000 and deploy that into 2 to 3 assets instead of just having it tied up into one. So that's what I told her. And now she's starting to realize, and she's starting to come down. She's been trying to sell it for quite some time. And this is what I love right now, because the sellers are feeling pain. Just look at the MLS, look at properties sitting for 60, 90, 120 days. Some of these properties are out there. So they're open. And if you find out why they selling, then you can kind of negotiate that. And then I always like asking the question, like towards the end, like, what are you going to do if you can't sell the property? And I just shut up. What are you going to do if you can't sell the home? Well, I guess I'm going to rent it. Well, ding, 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 reach out to me. I'll take care of the maintenance and repairs on the property. So I always like to dumb it down, and I always say when I call them up or we're negotiating, we're trying to find a deal, hey, would you be willing to rent the property to us for a few years, and then we'll close on it, and I'll take care of the maintenance and repairs. And if they say yes, then I know they're open to some type of terms. They say, oh, I wish I could, but I need the capital to move to my other property. That's a door opening, because that means they want to sell, but they need some capital. So I will explore that and start talking to them and see what I could do, come up with ways to help them get the capital. And oftentimes what I like to do is, like, I will go ahead and use my end buyer's capital and stay in the deal and buy the property. That's what I love doing. I like negotiating a really low down payment with the seller, and then go out and find my end buyer's capital and have them put 10, 15% down, and then maybe give my seller 5% or less down. So I can get into the deal with no money down, put money in my pocket up front, as these guys would do what's called an assignment fee. I'm making that same amount of money up front, and I'm staying in the middle, and I look for a minimum cash flow of $500 a month. Minimum. That's how I get into these deals with very little money down. But even if, I get a lot of people that I work with that are like husband and wives, and they want to buy real estate, and they've already owned 3 to 6 properties, and they've done the traditional route, putting 20-30% down, and they ran out of capital. So that's why they want to learn more about the seller fund. And you don't have to jump through the hoops, this DSCR loan stuff and paperwork and getting appraisals, and oh, this didn't come in, that didn't come in. So I don't have to worry about any of that stuff, and don't have to worry about getting your credit pulled.
Wow, that's pretty good. So when it comes to not getting your credit pulled, um, it doesn't matter what type of credit you have,
It
whether it's
doesn't
good or
matter at all.
bad, as long as you get some
No.
money.
No, not at all. It does not matter. And anybody listening right now, if you guys have any questions on I'm talking about these strategies, you know, raise your hand, jump in. I'll be more than happy to answer any questions on this stuff. But yeah, you don't have to worry about. I mean, the last time I had my credit pulled on a residential home was my primary residence right here, and I did this on a creative deal. I went under contract in 2010, and I finally closed in 2015 because I didn't know if I was going to buy it, and I had $58,000 of equity because I locked in. I did a lease option, a rent to own with the seller in this property. I locked in the contract then, and I just kept renewing it every year. And then when I finally closed on it, um, you know, it worked out really well. So that's kind of what I tend to do. All right, we have a question. Pam, go ahead and jump in there.
Yes, I was just calling to, I mean, I'm just asking you about the lease option thing. So the lease option, could you talk more about that? Like if I buy a property, seller finance, or do I buy it lease option and lock it in? I'm not understanding how that works.
You can do it both ways. Typically, what I like to do is I like to buy through seller financing, and I like to sell in a lease option to my tenant buyer. It all depends on how much capital they're going to put down. If they're going to put more than 10% down, then you usually have to sell it on the seller financing, because if the deal goes bad and you get in front of a judge and you took a seller's that much money down and you don't structure it as a form of seller financing, because the judge is going to look at it as they should have what's called equitable interest in the property because they put so much money into the property down. But otherwise, if it's like 10% or less, then you can do a lease option. But you can buy a property if you don't have a lot of capital. And this is one of my first strategies when I started back in 1995. I started doing what's called a sandwich lease option. I would go into contract with a seller as a rent to own, lock into a price, lock into a monthly payments. I say I'm going to take care of the maintenance and repairs up to like $3,500. Anything more than that, most likely it's the homeowner's insurance is going to kick in. And then it allows me to sublet it. And then I go ahead and put my end buyer in the property, and I sell it to them at a higher price, and I sell it to them at a higher monthly payment. I negotiate my monthly payment down with the seller, and I tell the seller, hey, by the way, if I make my payment on or before the due date, I also want a credit applied towards a purchase price, like $150 or $200 a month. So if I do that, and I did one not too long ago, where it was a 30-month contract, $150 credit, I got an extra $5,500 off the purchase price on that because I negotiated that. Then what you do is you upsell it to your end buyer, and you can make your cash flow. I like to, whatever the market rent is, I like to go 250 below with my seller, and I like to go 250 above with my buyer, so I'm making a cash flow of $500 a month. That's one of the strategies I like doing. But mainly, I want to try to get the deed because I want to get the tax depreciation on it. So you can do a different type of seller finance. You can do a subject to. You guys are all familiar with a subject to. I would never pitch a subject to if a seller is not financial distress. Hey, Mr. Sell, does anybody here not know what a subject to is? So everybody knows what a subject to is. Okay. So you're buying the property, keeping the existing mortgage in place with the seller, but you're transferring the deed over to you. But if a seller's not financial distress and you say, hey, Mr. Seller, keep the mortgage in your name, transfer to me, they're going to look at me like I'm crazy. So that's where I come up with another, I call them a tool belt, different tools, a different strategy. Then I come up with like a different strategy, a contract for deed or a land contract or installment sale, sandwich lease option. So you can still get into the deal, you can still control it and get very little money down. But most sellers are going to look at you like, why would I transfer the deed over? Now, if you have to put a lot of money into the property or you have to bring the mortgage current and something on those, then I'll do a subject to. And then I usually put those, I don't put it in my LLC, I'll put it into a trust, a land trust. So it helps with the doing sales clause. So thousands of these type of transactions over the years. I started in 1995 when I started. Actually, it's going to be 30 years this summer. But I started my first couple years. I started out doing what was called the sandwich lease option, that particular one, and then I moved into doing a subject to, and then some of the other strategies over the years. But if you don't have a lot of capital, and it's less risky to do what's called a sandwich lease, because you can always just give the property back versus when you do a subject to and you do an assignment and your end buyer stops paying, and then the seller's mortgage falls behind, and you structure that deal and you do assignment, you're going to get pulled into that whole thing. They're all like, "Oh, my contracts are good." I can't tell you how many times I get calls from people in other programs where they're doing an assignment subject to, and that buyer stops making payments, and they're calling me up because they're getting pulled into it. So that's why I like staying in the middle, controlling it. And oftentimes you can always come out ahead. So if you don't have a lot of capital, when you're getting a deposit from your buyer, you want to hold 3 to 6 months of reserves. So if that something happens, or you can always bring capital partners in. If you have a good deal, you can always find a capital partner. So Pam, did I answer your question?
Yes, I just had one more quick question for you. So
Absolutely.
on that lease option thing, um, let's say we have a couple that wants to, buy a lease option. They want to lease it for a while because I want to make sure that I can see that they can pay the note. And then I guess they would just move into that ownership phase after what, 6 months or 8 months,
No,
or how do you
yeah,
determine that?
it's usually a couple years. It's not
Okay,
that
so
short.
they would have to lease for 2 years, and the paperwork says it all up front, like you make it like a buy, like a
Yeah,
seller.
but even 2 years might not be, because that's how we make money in our investors. We're selling at a premium. So whatever that value is, now it's not ARV. This is where wholesalers get mixed up when you come into the seller financing world. It's the as is value, because that ARV and as is value could be 50, $60,000 swing. So whatever the as is value, I'm usually selling it for 10% more. So I need to make sure that property is going to have that value in that time period. And if it's not, then it's going to be a problem for my buyer. And I want my buyer to be able to buy that property. Plus, it usually takes those people usually have good income, but they have credit challenges. And it usually takes them anywhere between 18 to 30 months for them to get the credit in line to be able to buy that property. Plus, they're establishing payment history in that property. So that's some of the things that the mortgage underwriter is going to look at, is the payment history for the last 24 months on that property. So there's a lot of different factors that go into that.
Okay, thank you.
Awesome. Awesome. Anybody else have any other questions? Feel free to raise your hand or drop them in the chat. Mark is a wealth of knowledge. Mark, can you go over your experience real quick of what you've done and your accolades?
Well, I started, like I said, actually I started spring of in 1995. Got into doing real estate banking. Started out as a loan officer at first, and then I fell into doing because during that time it was kind of like the market is now. The homes aren't moving as much. So what I was doing was I was reaching out to sellers, see if they'll be open to doing a rent to own, but they'd be like, "Oh, I need my money to go buy my other home." I'm like, okay, what I'll do is I'll refinance your current home up to 80% loan to value. And then take that. Oh, by the way, your new home you're purchasing, I want to do the loan on that one. I would do the loan on the refinance, and then I would put a tenant buyer in there. So on one lead back in 1995, I was making on the front end roughly about $35,000, my average, because I was refinancing the two loans and then getting a down payment for my tenant buyer. So I started doing that. I ended up having 107 loan officers working for me at one time as well, with a team of underwriters. So I understand what my underwriters will look at for my end buyer to kind of get into the property. So that's one of the things why sellers like my program, because they can look me up. They see I've done over $500 million of real estate transactions, and they can see I have a good history. And if my end buyer stops paying, I step up to the plate. My company steps up to the plate and make the payments. But I'm really good at underwriting my buyers and putting my buyers into that property. I just don't throw anybody in the property. I want to make sure. So I always have them go through what's called a licensed RMLO, a mortgage loan originator, and have that third party to make sure that whatever that they follow their advice in 2 to 3 years, that they're going to be able to purchase that home, because I want them to purchase that home, because I get my spread on that back end too. So I make money up front, I make money, monthly cash flow, and I make my money in the end. So you make today, tomorrow, and back end money. So that's how I like. So I like to create the arbitrage. And I love lease options because you can control the property without even owning it. So,
Awesome.
and then that's residential. I've done commercial. I've done help people structure businesses through seller financing, land development. So once you understand all these different type of seller financing strategies, you can use these. But I teach residential because it's easier.
Yeah, for sure. Now, Pam, did you have another question?
Actually, I do. I have so
Okay,
many
go ahead.
questions.
It's all good. Ask
Okay,
away.
I'm just really hung up on this lease option thing because I'm seeing it in my area. That's starting to be something that I'm attracting more and more and more are people that want to owner finance, or they are sellers are getting in a bind, not being able to pay their mortgages for different reasons. So it's becoming more and more of a trend to be able to either take over the note, or if the house is paid off, then, move it forward that way. And there again, there's a lot of people wanting to lease, but they don't want to stay in a lease. So I'm thinking, okay, there's an opportunity. So they've got good jobs. Their credit's a little bit needing some work here. So they don't have a lot of money and stuff. So I guess my question is, I'm just wanting to really sink my teeth into this lease option thing. And I'm just trying to get my head wrapped around it because I don't understand how you can make it a lease and then make it a financing deal at the same time. I'm just trying to
It's
wrap my head around that.
Well, it's two different things. If you're doing a lease agreement, you're doing a lease agreement allowing you to sublet it. It's done all the time in commercial space. Finance is that's a whole different strategy structure. So they're all technically, I call them seller financing strategies because each one of these are different strategies. Some are considered financing, some are not. That's why you need if you're going to do like a seller financing and they're going to live in there as a homestead buyer, you need to use a licensed umbrella because you also have what's called consumer protection regulations to make sure that you put a buyer in that property that can afford it. Many years ago, and you kind of see that happening now, where these guys are just taking the large down payment, assignment fees, and not knowing they can qualify, and then after 3 to 6 months to default. Well, in 2003 to 2005, investors went to jail over that because they didn't qualify the people, and some people were egregiously doing it on purpose, knowing they couldn't afford it, and then take the property back after 3 months. So there's a lot of nuances there. But when you're doing a lease option, you're structuring it as a lease agreement, allowing you to sublet it. You have some language in there like who's responsible for maintenance and repairs and so on. And then you also got to check with your state because some of the states may have different regulations as well in your contract because some states you might run into what's called the land, and then you have the option fee. Are you calling that a down payment? If so, then they have equitable interest. So depending on the state, if you go to evict them, you count it as a down payment, then you may have to go through a foreclosure process, and versus if you structure as an option fee that's not a down payment, then you can get them out through a lease agreement. So there's a lot of those little facets that go into it. So you just need to educate yourself correctly on that. Chris, we'll come to you in a second. I see your hand up there. Um, but a sandwich lease option is a great way of getting into these type of deals. And yes, the sellers are motivated. These are awesome. I'm doubling down. I've been doing a lot more of these because I was in commercial arena space for quite some time, but this market is prime where sellers can't sell and they need to sell. And that's why it's good opportunities for us buyers to come in and buy these properties and put people in the property. You can own it your home and you can put tenants in there. Or you can put a tenant buyer in there and sandwich it and make money. That's what I like doing because I don't want to worry about leaky toilets at 2 o'clock in the morning. Now, if it's multifamily, that's a whole different story because then I use a property manager. But I like buying nice homes in nice neighborhood, and I like putting people in there that want to become homeowners, but they can't because they have credit challenges, but you give them the opportunity, and it's such a good feeling helping them out. And I love it when they have young children because they don't want to move around. They want to raise their children in that area near nice schools. Did I answer your question, Pam?
Yes, you did. Thank you so much.
All right, we'll go to Chris now. Hey, Chris, how you doing, man?
Hey, hey, how you doing? I had a quick question. House been on the market for 2 months. The owner wants 375. I want to try to do owner finance. How much would I offer the owner to get into that house?
All right. One of the two things when anybody comes to me, there's two things I always want to know. Why are they selling?
Okay.
And what are they planning on doing with that capital?
Now the capital, do they just keep the capital or some of the capital put towards?
And that's why you need to find out. Like, I give you a quick background. I had this gentleman that was open to seller financing, but he wanted $30,000 down. And I built a rapport with him. And I found out what he needed the capital for.
Okay.
And when I build a rapport, when you're doing these type of deals, you got to remember it's like a marriage. You're in a contract with these people 3, 5, 7, 10 years, whatever it may be. So the first time you're talking to them, you want to treat it like you're on a date with your spouse. So it's all about rapport. So let me give you, I had this gentleman, he was open to sell financing. He wanted $30,000 down. And I found out he needed $25,000 because he wanted to buy a camper. This was last spring. I ended up negotiating with him, and I found out I ended up negotiating. I got that deal, and he had over. I said, "How many offers you had?" He had 12 to 15 offers from other investors. They didn't find out what he needed the cash for, and I did. They're all just throwing offers, and he said everybody was beating me up in the down payment, and I already knew he needed that money. I said, I talked to the seller. I said, you know what? I'll give you $3,500 down. He told me he banks with a credit and he's got good credit. I said, go take the loan out for the camper for the $25,000. And on the 20th of every month, we'll have the money pulled directly out of our account and sent directly to the credit union and make the payment on his behalf. I got that deal for $3,500 down and cash flowing $475 a month because I listened to the seller and I understood what he was. And I tried it. Why is he selling? What he plans on doing in the capital? Those are the things. If you can figure that out, the rest of it is just numbers.
Okay. Okay. Thank you.
So because I understood what's he need the cash for, then then that's where you be creative. You can come up with solutions and how to solve the seller's problems. And if you do that, that's how you get in these deals with very little money down.
Okay. Thank you very much.
Was that
Thank you.
helpful?
Yes, it was very helpful. It was very helpful.
Awesome. Is it Joni? Or how do you say your name?
It's Janae.
Hey,
Jenny?
Janae, how you doing?
Janae?
Good. How are you guys? Hey,
Doing
okay,
well.
so
Go ahead.
I'm in Oregon. So my question is, let's say you offer them a seller finance or even a sub two, but they're needing that down they want to buy another house. They want out of this current house. They're thinking, and I'm saying they're thinking because they're a distressed seller anyway. In their heads, they're going to take that money and they're going to go purchase another house because the deed is being sent to you, but you're either taking, no matter what, you're paying for their mortgage, which is still going to be in their name. Is there a way around that? So, I mean, how would they work that?
Is there a way around what? What do you like? Because you
Because
kind of
you're making their mortgage payments, right? But
correct.
unless you pay them the 35,000, let's say up front, and let's say they actually go to apply for another loan, that current loan is still going to show in their name.
Well, because you can show the paperwork and you supply that paperwork to the underwriter, and the underwriter will offset that to the DTI, the debt to income ratio. They'll offset that.
Okay.
So
So that there is a way around that.
Oh, 100%. But you want to make sure the lending institution you're going through has dealt with that, because sometimes the first time an underwriter is underwriting one, they're like, oh, I don't know what I'm doing. And they're going to say, just do a lease agreement and then offset that. That's so sometimes if you do that, what I've done is I do a sandwich lease option. And so they can get that done, so they can get the loan. And then once they've done it, then we convert it into a different type of, then we do a subject to or an agreement for deed or land contract. So I've done those type of things. But I have lenders that I can go to, and I know that won't be a problem because they've done it. But if they want to go to the certain lender that's who they want to deal with, you have to talk to them and make sure that they understand that and that they know what paperwork. What paperwork do you want from us to offset that DTI, debt to income ratio?
Okay. And that won't set off red flags for the current mortgage to call it due.
Well, that's it. That always could be called due. That's why I always put those into trust. I
Okay.
put them into a trust, land
That was
trust,
my
if you
next
will.
question. I thought I heard you
Yep.
say that. Okay.
Because it looks like it's done for estate purposes. Don't put the address on there, because the old days we always used to put the address 123 Main Street Trust. Well, the lenders
Mhm.
now are starting to see that those are subject to deals, and they're starting to call those due. So call it like Monroe Trust or whatever the seller's last name trust or whatever. And then and inside the trust, then the beneficiary becomes your. I'm not an attorney, so check with your
Right,
attorney, but
right,
I'm just telling you what I do on my stuff.
right. Okay. I thought I heard you
So
say that. I just wanted to check.
so but Oregon's a good state. Just be careful. But yeah, use your end buyer's capital. That's what I would do to try to get into the deal, and try to negotiate. But again, you listened to how I came up with that, where I found that seller's problem. He needed money for a camper, money down. Now, it used to be good. I used to be able to have them take HELOCs and stuff like that. But in some markets, that's tough to make those numbers work, because you're paying the first and you're paying the second, and it's not covering the market rent. Like in Florida, I'm having a hard time with that right now, because of the interest rates are higher, the prices jumped up, and we are just underwriting one in Orlando, and the mortgage payment is going to be $700 more than the market rent. So that numbers are way out of whack. So
Mhm.
something like that, then I propose a sandwich lease option. Like I'll do whatever the market rent is. Because what are you going to do? I asked the seller, what are you going to do if you can't sell? Like,
Right,
shut up. Let them think.
right. I've actually
But
heard that. I just jumped off another call and somebody just said that. Stop talking. Listen.
yep,
Let them figure it out.
exactly.
So,
Just let them sell. But again, it's the
yep.
marriage. It's they're gonna do business with you because they like you, and they're gonna do a relationship. So you gotta treat them like a spouse, like your spouse. Get to know them and have them get to know you too in return. You get to know each other. So my first time talking to a seller, 80% of my phone call is just building a relationship, getting to know them, because you know they're interviewing you to make sure you're going to do what you're telling you, and you're interviewing them to make sure they're not a crazy seller. Because I've had those. Where's my payment? The payment's due on the first, and today's the 15th of the month. You got another half a month before your payment gets there. Some of these people like, where's my payment? you know so you can tell if they're a crazy seller. You don't want to get in, or just like a spouse, if they start, where are you, this, that, you're not going to want to marry that person. It's the same
Right.
concept.
All right. Well, thank you.
Sure, thank you for joining us.
Awesome. And Arthur's asking, going back to that due on clause thing, if
Sure.
due on clause gets triggered, how do you deal with that?
It's easy. There's so many different ways of doing that. If you had it for a while, you can possibly refinance it, use a DSCR loan, you can transfer it back to the seller, and then put it back in the seller's name, and then just do like a lease option. Or I I like to do what's called an agreement for deed, so it doesn't get recorded, but I'm controlling it, and I get the tax depreciation, or a land contract. There's so many different ways of going about it, but um, if and I also look at, if it's a small bank and a credit union, and I can do a subject to, I won't do it, because those are the guys that will typically do the due on sales clause on that one. It's so many different ways of doing it. Can't hear you,
Awesome,
Matt.
awesome. I know. I'm
Well,
sorry. I was sitting here
it's all
talking.
good.
So, wow, awesome.
Anybody else?
So, when it comes to, say, a property's on market, how long are you looking for it to be on market typically before you really approach them?
For me, I like, in this market, about 2 months plus. And then the other thing, keep in mind, 70%, keep this in mind, 70% of my deals come from follow up, where I present an offer and they still try selling it traditionally, and I follow up because they're feeling the pain more. And so constantly, a lot of investors will just go ahead and make an offer, and they go on to another one, think the other one's going to be a hot one, when you already built a relationship with these people. So I had a deal that came back. I pitched like 18 months, and they come back around.
Wow.
So make sure you have a really good follow up.
How fast do you follow up?
How fast?
Yeah.
I usually do anywhere between 45 to 60 days every follow up. Like, hey, just touching base with you. Did you ever sell your home? I'm still interested. Don't forget about my offer. You know, I had one that I've been going back and forth with, and she's wanting too much money down, and now she's starting to come around. Like, I'm making offers that work for me. I don't make offers that work for the seller. It has to work for kind of both. Can't be one-sided. And that's what happens a lot of times. Andrew will come to you in a second, but that's what happens a lot of times. People are making offers for the seller just because they want a deal so bad and they lock it up. And then they're trying to do an assignment and then they can't sell it. And then the seller's making arrangements to going out there and be able to move on a property and they're putting a deposit down. That's what's causing wholesaling to become illegal because of that situation. So that's why I will make an offer that works for me. And the other thing is, and I mentioned this a couple times, all you have to do is 3 to 5 deals a year. 3 to 5 deals a year. Think about this. My average deal that my spread that I do on an average deal is about 150,000 to 200,000 that I'm usually making on a deal. So, and if you do think about this, if you're doing 3 to 5 deals a year and you're having them coming due like in about 5 years, let's say, and the average on the back end that's coming due is about 70,000 to 150,000. Say 100,000 is the average. So if you have 3 to 5 deals a year coming due, that's an extra $300,000 to $500,000 a year you're getting on top of the other deals that you're doing and generating that passive income. That's where, and people are grinding and trying to do 20 wholesale deals a year, where you all you have to do is 3 to 5 a year, and you make more than you do on wholesaling. So, anyways, Andrew's got a question. What's going on, Andrew?
Hey Mark, how's it going?
Going well.
I wanted to ask about like USDA loans and those for subject to, or have you ever done a subject to deal with a USDA loan in place?
I have. I've done
Okay.
them with IRS liens in place.
Okay.
With other liens. Yep. IRS lien. I had one where, and the title company said in this area after 10 years it automatically drops off, and I bought it with at 8 years and it dropped off. But yes, you can do a subject to with any type of loan against a property. I've done them and they're perfectly legal. That's why in the HUDs they have what's called subject to. Currently they're legal. I could see it where it becomes illegal because it's becoming a wild, wild west. And these deals were always designed for us investors to stay in the middle and control it. So if our buyers stopped paying, we always stepped up. It's more for experience. But what's happening is some people are getting into the game doing subject twos with no experience. That's why if you have no experience, you should start with a seamless lease option because it's less risky. But anyways, yes. What, you have a deal that you're looking at like that?
Yeah, I had a verbal offer accepted and I'm writing up the contract and we'll be meeting with her on Wednesday. And she
Awesome.
has the USDA loan in place. So anyway, she owes back, I guess, payments in the arrears, right, for it. But they ended up taking from the U.S. Treasury paid off from her taxes, like most of it. But basically, what I'm going to do is I'm going to give her $2,500, to transition. And then I'm trying to structure it so that I can also have a buyer on the opposite side. I haven't actually, would be my first one, so I don't know exactly what to look for or how to find a buyer yet, but I'm trying to work
Well,
with someone who's experienced that can, JV it with me. So,
yeah. Well, this could be, what's the population of the area where the home is?
let me see.
Because that could be a problem usually, like when you're saying,
For USDA loans, you mean?
yeah, and it's
Um,
usually really hard to find buyers for those.
let me see. It's in Gaffney, South Carolina.
Never heard of it. But like
Uh,
when you find a deal in a rural area, like I
mhm,
won't go below 15,000, or unless it's got to be a population within 30 minutes. It's
mhm,
so hard to find buyers for those. You can get
mm,
deals all day long. And the other thing is you got to find your buy box. Like my buy box is whatever the median price range for that area
mhm,
is 20%. So like say the median price range is 300 and I
mhm.
have a deal, oh yeah, I can buy that deal subject to or seller financing and it's, they want 700,000. Sure, I can get it, but you know how hard it is to try to find that buyer for that property.
Yeah.
So just be careful of that. But that's awesome. But what's the population? Did you notice?
Uh, well, as far as 2023, it was 13,000. So it
Make
is,
sure you give yourself a long due diligence period so you can back out of that contract inspection
yeah.
period.
Yeah, for sure. It's
How far
relatively
away
close
is
to
Novation?
Charlotte, but yeah,
How far is from?
it's not too far.
Okay.
Um, yeah, I think it looks like an hour away. Let me see.
What kind of property, is it quite a few acres on it?
Let me see. It is.
So I know here in Cincinnati, we have like, if you go about 30 minutes in either
Mhm.
direction, you can get a USDA loan from downtown Cincinnati. So
Yeah. So it's about 55 miles. But yeah, it's a little less than an acre.
It just, you could definitely just give yourself an out just in case you can't find a buyer on it, you know?
Yeah, yeah.
And if you run into a problem, make sure you have good communication with the seller so
Mhm.
they don't put deposits down wherever they're moving.
Yeah.
Um,
Well,
that kind of thing.
she
Go ahead.
actually, it's vacant now and she's already
Okay.
moved. Yeah, she's just trying to avoid foreclosure at this point.
Okay.
So,
Nice. How many months how much you got to bring to current?
honestly, it's only like 2 grand.
Wow.
Because the treasury paid off like most of it. It was about 7,000
Nice.
in
That's good.
arrears.
All right. Nice.
Yeah.
You might even be able to bring a capital partner in and just put a tenant in there.
That's what I was thinking too. Was wondering if I could just do that.
Yeah, you have a lot of options there in
Okay.
that one.
Yeah.
You could definitely do stuff like that.
Hmm.
But just make sure you put in a trust and make sure the insurance is done correctly.
Hmm.
Because that's what usually triggers it on sales is the insurance.
Okay. Um,
So
so how likely would it be that there would be a due on sale clause, I guess, with the USDA
as
loan?
long as you do things correctly and
Hmm.
you should be perfectly fine. Like
Okay.
I'm telling you, again, I'm not an attorney. I'm telling you,
Sure,
I
sure.
would put mine into a land trust.
Hmm.
That's how I do mine. And even my end buyer, I'd want to make sure it's in a land trust.
Hmm.
Um, for that's for create creates anonymity. That's really what it does. The land trust does. And make sure your insurance is set up correctly and talk to um, so you want to always make sure the seller's name's on there and then whoever else the buyer's name or the investor's name's in there as well. So just make sure it's done correctly.
Okay. Sounds good.
That's where things usually go sideways there.
The
And
set.
make sure you
Hmm.
and make sure you get a log into the portal, whatever her portal is, have credentials to log into the portal.
Hmm.
And usually what I do is I create a Gmail just for that portal, and then the seller's getting notices, and then I'm getting notices as well. And then if I put a buyer in there, everybody's getting notices. So every time there's a payment made, we all know whenever, or if a payment increase or anything, everybody's on the same page.
Hmm. Are you talking about the portal to pay the
The
mortgage
lender,
or? Yeah.
yes,
Yeah,
yes.
yeah.
Yeah.
Okay.
So you want, but what I normally do is I create a Gmail just for that property. Let's say it's 123 Main Street at Gmail, and then in there you can have it always forward to
Mhm.
like other forwarding emails, so everybody gets a notice. But then whoever's making the payments, have them automatically pulled out of whoever's bank account. The
Mhm.
other thing is keep in mind where people don't realize this: if you're putting a buyer in here and you're selling it, when you use a loan servicing company, I've seen deals people get into it and they screw up because um, what I always do, excuse me, is on the 25th of every month, my payment is automatically going out to the lender. So it's there on the first. Even though I didn't get possibly my buyer's payment yet,
Mhm.
I'm still making sure my payment goes out. And I usually have 3 months reserves. So if something happens.
Mhm.
But what happened was this person went through a program and got a deal from a wholesaler subject to wholesaler assignment. They
Mhm.
use a TC transactional coordinator. Everybody had this thing all screwed up. They use a loan servicing company, which is great, but they didn't know that most loan servicing companies, when they get that payment, is holding that check for 2 weeks if it's
Mhm.
not wired, if they're sending a regular check. They want to make sure that check's clear.
Mhm.
And what they did is they did what's called a performance deed or deed in lieu. I don't know if you ever heard of that. I never recommend that. There's a lot of things can happen. And they did that on this deal. The wholesaler set it up, doing an assignment, deed in lieu. And so the buyer's first payment was on the 5th. The second payment was on the 9th. The third one was on the 18th. Well, when they went and dispersed that fund on the 18th, they're 30 days late. That seller said, "Oh, I want my property back."
Mhm.
They put a buyer in that property that put $50,000 down. They were getting sued for $130,000
Sheesh.
from the seller because of
Wow.
all of that wasn't set up the correct way.
Mm.
So you want to make sure you've got to make sure a lot of these guys out there promoting, oh, let's do a subject to, we'll do an assignment, we'll do a deed in lieu or whatever. And if I don't make my payments, the property comes back to you. Be very, very careful on that. I had a deal that I did a subject to deal on, and it was, I would say, God, it was like 15, 12 years ago, and they didn't have the portal set up. So the statements was going to the seller, and it was first it was coming to us, then somehow it ended up going to seller. I had my auto payment going out every month on the 25th. Well, what happened was the loan was sold. I did not know that.
Oh, yeah. A
And
different
the
servicer.
the first payment was, now granted, I paid 7 years down on this mortgage.
Hmm.
So the first payment went out to the loan servicer, forwarded it. The second and third one, they didn't forward it, they held it. Now the seller's mortgage was 2 months delinquent.
Hmm.
If I had a deed in lieu to performance, my 7 years, that seller would have got that property back. It went up in appreciation, and I paid that mortgage down. I would have been screwed. I would have lost over $200,000 in that deal.
Hmm.
But because of that, I didn't have that. I had to. Now we got it all squared away, but also the seller's credit was screwed up. So even though I didn't have canceled checks because they didn't cash it, I had to go to my bank and show that they sent it out auto pay. So it took us about 8 months to get his credit fixed too.
Hmm.
So that's why I never do a deed in lieu or a performance deed or any of that stuff. Just keep it as is and never even bring up, oh, if I stop paying, just say, hey, if I stop paying, you just you foreclose on and take the property back. But I've never allowed that to happen. I've been doing all these. So hopefully that was helpful.
Yeah.
Go ahead.
One more follow-up question is that the USDA loans, don't they typically stipulate that you can't rent it out? So in the case that they sold it to this trust and I'm the beneficiary, but then I rent it out, is that kind of a loophole, if you will? Or I'm just a little confused as to like any lender that says you can't, like a FHA or any of those that say that you
Well,
can't rent
you
out.
got to find those, because most of those you can after a year. You can
Mhm.
typically, so find out a little bit more on that.
Okay.
On that particular, for that particular program, you can do an FHA and VA. You can, but they have to live in it for a year before they can rent it out.
Yeah.
And the lender will allow it to be rented out before going to foreclosure because they can't make the payments.
Mhm. Gotcha. And one more follow-up question. When you said
Absolutely.
3 to 5 deals a year, you can make all that money. Like, can you just talk to me about how that works,
All
the
right,
math?
let's look at your deal, for example.
Mhm.
You're saying 375 you can buy it, you take it over for, right?
375?
375,000 you said? You on that, was that your deal? No,
No,
I'm sorry. What are you paying for this property?
well, I could get into it by just giving,
Right.
cash to close, 200,
Right. And what's the
2,500,
balance on it? Right. What's the balance on it?
2,000 in
No,
arrears.
the balance, the
Oh, the
mortgage
balance.
balance.
Oh, 190. Like
Okay.
190, yeah.
All right, let's just use this deal as an example. All right, and what's the PITI and everything included? Because it's probably insurance.
Yeah.
What's the whole monthly payment on it?
699.
All right, tax, insurance.
Yeah, including.
That's everything. 699.
Mm-hmm.
All right, what's the market rent?
1,400.
Okay.
Yeah.
So I would probably do 1,550. Okay.
Mm-hmm.
So let's just do this. So say $700 a month. Okay.
Mm-hmm.
Into 1,550. So you can cash flow 850 a month off this deal.
Mm-hmm.
Okay.
Mm-hmm.
And you sell it as a lease option. Then what I would do is, let's say you do it on a 60-month contract. It's 5 years. Okay. So right there, 850 times 60, that's $51,000 that you're going to collect in 5 years off the cash flow on that. Okay.
Mm-hmm. Mm-hmm. Mm-hmm.
All right. Now you're going to sell that roughly I would probably sell that probably at a 12.5% overage. So I'm going to add roughly another $25,000 to it. Okay.
Is that
On the
an
back end premium.
appreciation? Are you
Yes.
saying an
Yeah, I'm selling it
appreciation?
on
Okay.
I'm selling it as a lease option.
Hmm.
So I'll get them in there. So I would sell it for 199. So I would sell it now at 225 as a lease option.
Okay.
Okay.
Yeah.
Now on 5 years. Okay. So you're going to get $25,000 in the spread from there from the purchase price. Now, you're also going to be paying that mortgage down in 5 years. That's
Mhm.
probably going to come down another $10,000-15,000.
Mhm.
Okay.
Yeah.
So let's say 12,000. All right. So you're gonna make $51,000 on the monthly cash flow, $25,000 on the back end spread, and then the mortgage balance is going to be paid down roughly. That's $91,000 you can make on that deal over 5 years.
Mm.
Do you follow that math?
It does. Yeah. It's
So you're going to make
appreciation. It's
850.
principal
You'll
pay
make
down.
850 a month, right?
Mhm.
850 a month. You sell it for about 12% over 5 years above to what today's value is,
Mhm.
and then you're going to be paying that mortgage balance down.
Makes sense. Okay, yeah, that makes sense. And then so
So
you're
on the
saying that if
back
I do
end,
three,
right,
3 to 5
right.
of
So
those, yeah, a
yeah,
year.
so
Mhm.
yeah, so on the back end on that one, you're gonna get roughly about almost $40,000 because it's a smaller one, it's a $200,000 one, but
Mhm.
still, if you just think about that and you have that much, and as you're doing 3 to 5 more, I mean that's a good cash flow, 850 a month.
Mhm. Yeah.
You should you should try to stay in the deal on that one. Use your end buyer's capital, and you can get money down on the front end too. You could probably ask for $15,000-20,000 down on a lease option. I would probably ask for $15,000 down, give
Mhm.
the seller her 2,500, then you have a little bit of closing. So you make about $7,500, maybe $8,000 on the front end on your pocket up front.
Mhm. Not bad.
Does that make sense?
Yeah. Totally.
That's how I would structure this thing. And then stay in the middle, cash flow, make 50K over 5 years, cash flow on that bad boy.
Mhm. Okay. So a balloon payment after the 5 years, essentially.
Well, you're doing a
Or
lease option, so it wouldn't be a balloon payment, but yeah.
I
If you're
meant for the
selling it as a,
seller to the
yes.
like, yeah,
Oh, no, with your guy, your seller, I would do like 7 years. So if something
7
happens, it
years.
gives you a grace period.
Gotcha.
Where
But
you want
5
to
years
give
year
yourself a grace
lease
period.
option.
So right. So if something happens, that buyer doesn't buy it or something, it gives you options, but that probably appreciate most likely in 5 years.
Mhm. And then if like the 5 years is up and they don't want to buy it, I could potentially sell it on market. Is that for the within
Absolutely.
those 2 years
Yep.
you're saying?
Yeah, I had a deal like that where I sold it them for 400, I'm sorry, 379,000.
Mhm.
And they put and I bought it subject to, and I brought her, she was 2 months behind. I brought a mortgage current and I gave her some moving. It cost me $16,000 to get into it. But my buyer put $25,000 down. So
Mhm.
I put some money up front. And when I took the mortgage over, the mortgage balance was 285,000 or something like that. And after 4 years, um, the payoff was 253,000. I sold it to my end buyers for 379. They had another 8 months to go, but they said they're moving and they weren't going to buy it.
Mhm.
I looked it up. Now remember, I sold it for 379. I looked the value at that time was worth 465,000.
Wow.
I gave them the down payment back, except some wear and tear, and I sold it for 479, and my payoff was so. And I was making $700 a month cash flow over 4 years on that thing.
It's beautiful.
You follow that?
Yeah.
Well, it's a pleasure meeting you,
Awesome.
man.
Yep, thanks.
Now, there's a lot to go into all this. I mean, a lot. So, Mark does have a coaching program. If anybody would like to schedule a call with the team to see if it's a good fit for you, we do make sure that it's a good fit for you before anybody joins. We don't want to just take anybody's money. We want to make sure that you're in a good spot financially and that you're able to go ahead and take the jump into getting into your first rental, because you do have to have some reserves per se. So we do have a link to schedule a call. I highly recommend hopping on a call. It's free, no sales. It's just a quick call to see if it's a good fit for you. I just dropped the link in the chat. I'll put it over here on Facebook as well. It's a 15-minute call with either Tommy or Reese. They're there to help you, and they're there to make you money. I mean, guys, Mark's making tons of money doing this, right, Mark?
I love it. That's why and the beauty of it is you can do it from anywhere in the world. I want to answer Arthur's, where do you find these deals? The deals are all over the place. Craigslist is good, Facebook Marketplace, Zillow for sale by owner, realtors. I've bird dogs like trashmen. They know the neighborhoods where homes are sitting empty, landscapers, Uber drivers. My home run deals come from hospice nurses. They're everywhere. So you just gotta turn over a bunch of stones. And again, 70% comes from your follow-ups. Like Andrew, how did you find your deal?
I actually ran a YouTube ad.
Awesome.
Yeah, and she
Congratulations.
called. Yeah. So again, I think, just any type of inbound also works too.
Yes,
Yeah.
absolutely. So you got a budget. A lot of people don't have a budget, so that's good that you
Yeah.
did that.
I'm still on like Zillow for sale by owner and stuff like that and Facebook because it still works. So
Oh, yeah. Also, just going to groups that are not real estate related, going to communities. I'm looking for a property to buy. I'm looking for a home that needs some TLC. There's so many different ways out there. You just gotta figure a way and just keep making offers and keep talking to sellers. Again, why they selling and what they're planning on doing with the capital. Because if you can figure that out, that's how you get in these deals with very little. Like Andrew found out her problem, the seller's issue there.
yeah, I would add just what you were mentioning is that my first call, I spent most of the time just figuring out what her situation was and her story. I did talk about the property, but it was more so building the connection. So
It's 100% that. That's where the art comes in. Like I had McLean comes in. I had two guys in my group that came in under 45 days. Both of these guys had no real estate experience and they did a first deal because they just built a rapport. They didn't get into numbers, and because they didn't know what they're doing, it actually worked out. And then they brought the deal into the group and we kind of underwrote it in the group and kind of told them exactly how to present the offer and they got the deal. So it's again, treat it like a marriage. It's like think you're on a date with your spouse the first time, your significant other.
Awesome.
Any other
Yeah,
questions?
I don't see any more questions. Nope, we're good. Um, but yeah, if you guys want to schedule a call. It's free. It's just a quick call to see if help you set yourself up in the right position. It's very important that you do this stuff right because you can get in a lot of trouble if you do it wrong. Uh, I mean, you just gotta
I've
make
seen
sure
it.
you're doing it right. So,
Yep. Yep. And it's great. You guys can make a lot of money once you really understand it. And always, always, always do what's right for the seller. Always. If you do what's right for the seller, it'll always come back from you. So just keep that in mind. Even if you don't get a deal and you give them some good advice, you'll get some referrals from it. So always do the right thing. It needs to be a win for the seller, it needs to be a win for your buyer, and you make some money being an investor in it. So
all right. So we'll stay on here for a couple seconds, a couple more minutes. If you have any more questions, feel free to ask real quick. If not, schedule a call. Just schedule a call, whether you're wanting to learn more or if you're just wanting to see if it's a good fit for you, just schedule it. No hassle. It's super simple. So, Mark, you have any final words to say?
no, it's good. I enjoy this. People say, why do I do this? And there's two reasons why. Um, it's like, if you have a child, and I don't have a child, but when you're giving your child that gift and you see the joy in their face, and that's what I like is you're helping people become homeowners. That's what I really, really enjoy, helping the people become homeowners and help saving sellers credits. Um, like that one example I was just talking about a second ago. I mean, her home was facing foreclosure and she was called me up because she was so happy because her credit score was 804. She's never had over 800. And then the other thing is people that are coming from nothing that think they can't make money in real estate because they don't because the credit is shot. You can become a real estate investor no matter how your credit is, and you can still get into properties with very little money down. You should have some reserves, but there's ways of kind of doing it, like I mentioned earlier. But you can do so many deals. That's why I suggest if you don't have a lot of money, start with what's called a sandwich lease option, because you can get in it's less risky. It's still a little risk, but it's less risky. And you don't hurt the seller's situation financially and hardship if you stop making payments on that one. So, but you always want to make payments and always be, if you ever run into issues, always be upfront with your sellers and your buyers and always be forthful. So, but thank you guys for coming. I appreciate it.
Yes, for sure. Make sure to, if you have any other questions, hop on a call with us, or you can put it in the Facebook group. Just ask away. We'll get to them. Mark will be there answering and giving you some good advice as always. And if you guys have anything else, just let us know. Mark,
Thank you
we're
guys for
good.
joining. Take
All
care.
right. See you guys.
Bye. Me in Facebook.
All right.
Yeah, I'm on. If I can find Facebook. That was good.